Hey everybody, what's up? It's Booksy. Today is Monday, September 11th. Had my last official daily AMC stream today this morning. Kind of a small crowd, probably because the stock's not doing well and because I said it was my last stream. I think a lot of people were kind of thinking that I was done with AMC. That is not the case. I actually sent out a message that said pretty explicitly that I was going to continue to monitor AMC, but and provide weekly updates if needed, and maybe even do streams in the future. But that it was going to stop doing the regular every single day streams. I'm not going to give every single reason for that. I said that as well. I'd like for people to just kind of respect my autonomy in the matter. A lot of people, you jump between being a conspiracy theorist, like, oh, he's getting paid off, to it's over, man. He's bailing on the stock. You know what I mean? You just kind of get to these crazy hyperbolic notions in your mind when someone says they're stopping something. But stopping something doesn't mean that you're falling away into darkness, as one person said. Sometimes it can be that you're stepping into the light. You could be moving from one particular thing to the next. And in this case, this is not my occupation. I don't actually do this full time, but it takes up a lot of my time. And time is something that you can't get back. 2 years of time spent looking at this. There's been some pretty great call outs. I was going through all my charts the other day, and there's been some pretty bad ones. There's been stuff that's gone just exactly, pinpoint to where we thought it would go, and then other times where it just completely, goes to mush. And I think that's just kind of the nature of the market in the last few years being kind of crazy ever since COVID. And with AMC, it's no exception. And AMC's had some pretty wild ups and downs here, specifically dealing with stuff like APE and then a reverse split, dealing with the constant shorting, 2 years in a downtrend, and ultimately like kind of culminated into last week. And last week to me was sort of the final, I don't want to say the final straw, because again, it makes it sound like I'm quitting. I'm not really quitting. But last week was a big deal to me because we broke down. And we hadn't made all-time lows up until last week. So when I look at the big picture here, that kind of changes the dynamic of AMC. I know you can see right here that you've got these orange lines. These are roughly equal distances percentage-wise from each other because I'm on a logarithmic chart. And up until last week, there was a possibility we were either going to double bottom or even make a higher low. And that possibility went away. And that changes the dynamic of this stock quite a bit because it goes from being in a probable uptrend to being in a possible downtrend. And it's not even a matter necessarily of, oh, it lost this creek, so then it has to go down to the next one. Although, yeah, you can see this kind of middle line here. That's the breakdown that happened right around 25. And after that kind of chop up, we got that weak looking thing that didn't look like a spring, and then it dropped really, really hard. And sure enough, it goes all the way down to the next level, and it stopped there. And then it did the same thing, chopped up for a week, and then unfortunately didn't finish any kind of a strong bottom, and drops again. And on the grand scheme of things, we're on the weekly time frame. It's finally oversold. It is making a higher RSI potentially as the bottom goes, if it turns around pretty soon, which could be a pretty major divergence. And last time we had that kind of a divergence was the hook action right here, which was way back in 2017. And you can see that hook going all the way down to the 2020. And then you can look at the RSI. It actually made a higher low on RSI and then does another stronger divergence going into the second bottom here after the bounce, which again goes lower. And then you get that massive reaction up through this middle line, which comes all the way down. So I'm mostly concerned right now with the fact that AMC made a lower low. And as a result, I think you're going to get a pretty strong reaction back to the upside. And I've already talked a lot on stream about 45. I think it's inevitable at some point that you're going to come back up here to this area. It's not inevitable that you're going to break out above it. And that's where I kind of have cause for alarm because historically on AMC, it does have a really strong reaction after a big S-curve. And there's only really one instance where that results in a pretty massive quick run to the upside, and that is back here in that March run up. And every other time we see it, and this is kind of the example of the March run up where it's fairly quick. It still took some time, but it was quick relative to itself, right? It was pretty fast. I think in the grand scheme of things, you could imagine that would take a lot longer from where we stand. But in most situations, this is generally what happens, is that we get an S-curve down. It becomes very parabolic at the end. We get a pretty strong reaction, if we make a lower low. And this is a very typical looking AMC bottom. And then we end up having to jump that bigger creek down. And it usually results in a bit of a time-consuming M cross, as we call it, right? The M shape is a sine wave cross, and then eventually that secondary push-up typically is where you see that after the jump of the creek. Typically is where you see it come back to those middle cat ears, as you can see in the little diagram I have, and then you get the SOS at the end. And all of that I used to call the T1, T2, T3 because it was this idea that you were creating an accumulation after the spring action, right? And this can be a fast action, but again, there's no evidence of that really on AMC. Not after a big S-curve. There's just none. You have to kind of work your way up, especially past this sort of middle point here. This tends to be right on that second cat ear. This tends to be a pretty harsh rejection area. And you can see on the diagram that I have here, this is the normal chart, that area is that 45. And not surprisingly, the downtrend here, the major downtrend that we started back in 2021, to break out, you'd probably have to be around 45. So there's just a whole lot of what if when you get up to this place. You'll note that when we broke out back in January of 2021, that this area happens to be a middle point, right? And it goes through this midline that I drew here. I'm going to highlight it for just a second so you can see it a little bit better. And that midline, again, is kind of right in that pocket. There's a whole lot of parallels that are kind of intersecting right here, right around that 45 area. So it's possible, if we get up there and we hold it with some strength, that we could see something akin to what happened in the buy button kind of removal era of AMC, because yeah, you could get up here and basically create a sign of strength, pushing into this area right above 35, and then retreat and essentially break it again. And this time you would push all the way up to the next region, which again presents itself around 150. I had found some previous price targets using trajectories at 150. I found another one today that was pretty compelling, and it's right around earnings. And I'll show it to you really quick. And I think, again, it's like 150 or 160, but these are things that you have to take with a grain of salt. I'm on the 4-hour right now, and you can look down bottom. You can see there's a bit of a divergence on the bottoms that have been made. It's a strong enough divergence that there could be a pretty major reaction if this pushes back to the upside. Perhaps enough to bust out of the current downward motion right here, but it's not a guarantee. In fact, there's still enough space here to come up to like $8 and then sell off one more time to even come into the 5 range. It's entirely possible. So I'm looking at this and I'm really just wanting to point out that, yeah, there's a pretty strong case to be made that there's a certain amount that's clustered up near this 160 area. And in theory, this could be a decent move to the upside, come up to that 42 area. There's 3 gaps, 1, 2, 3. One of them's around $8. The next one's around 12 something. The next one's around 41 something. And those 3 gaps, to me, are pretty clear iterative moves down. So it's possible, again, on a strong reaction with a V-shaped recovery. And sure enough, like the V opposite of this, 75 degrees down on the outer edge of this falling wedge, 75 degrees up does give you the same intersection here. And earlier, it wasn't that different. I think the original one we had went from mid-September to mid-October. Well, we're basically approaching mid-September. We have still gone down. And that's all there is to it, It seems to be clustering up right around the earnings, tentative earnings date, which presently looks like about November 9th. And that could be a strong possibility if you have a strong reaction and you can manage to get over both 25 and 45. Then I think you're probably going to have a pretty explosive move if you break out here, because that would be leading over that main downtrend that we've been stuck in. It's also a widening, and the widening still has a little bit of room to the downside. It still looks like it could go to 570, but this is a widening spread, and if it does react and break out up here around 42, it should, in theory, come back up to even higher than I've drawn it, because it would normally come back up to where it starts the widening. So somewhere around, not surprisingly, this level right here at the top of March. And you can see what I mean. You can look, this is kind of right where the widening really starts here, and that's pretty much the same level. So it follows with Bukowski methodology that it could do that as long as it breaks above 45. And that's kind of like the general idea right now, is like it just needs to bottom and have a pretty strong reaction back to the upside. The main issue is that where is the floor, right? And this is where I'm finding a lot of people are. I had a few folks today on Discord that were kind of quoting me and saying, "Oh, he thinks this or he thinks that." It's like, look, don't take it out of context, okay? Let me explain it, and you'll see what I mean. So I'm gonna for a moment. I'm gonna highlight I'm going to highlight these arrows that are moving, so you can see this is kind of the general price action for this stock. It's very bright white now, so you can see it. And you can see that there's two M crosses. One starts here, and it's an M cross that essentially creates a sine wave across the original low for the stock, right around 113 now. And then that breakdown leads to the COVID drop, but it ultimately travels 2 distances, right? 2 of these lengths down. And it might be a little bit difficult to see some of these markers on the chart, but I've got one right here at right about 35, and then the one I was just talking about was like 113, and it comes to a new low, and it's down here on 1080, okay, roughly. These are not exact numbers. Point being is that when it finds a bottom, right, it finishes with another M cross. You can see the push up. This is pressing against the resistance at the time, right here, which is coming down. It's like pressing down, and then there's a secondary push up that jumps the resistance. This is the creek that's jumped, this little red guy. And then obviously that's also whipping around this kind of midline that was created on these M's. You can think about this sort of like an S curve coming down, and this is basically going back to that middle port of the S curve and then starting to push back up. Well, it also happens to respect, as it would, respect very well, actually, these horizontals. And so it goes all the way up to about that 113, then comes all the way back down to about 35, and then it pushes all the way up to the next one. And just so happens that this is also like a 50-50, right? So you split this in half and you get roughly the same distance up to the new all-time high. And you'll see that it follows that's really the same all throughout this stock. You could take like a 50% dissection of any of these areas and you'll find strength and support. And so it's a very systematic kind of way of looking at it. And I specifically have done this in the past when I did the sine wave thing. I had found there was like a 30%, 50% reduction that you could do, and it was fairly successful way of looking at it. Well, the point of this is not just to say like, ooh, like you can do this perfectly and it's all wonderful. It's not exactly perfect, but it's more just to say like, look, there's a pattern here, and it's pretty clear. And when you get to the place where we are now, what this starts looking like becomes more evident, which is really just a breakdown and then a rejection ultimately. If you look at right where we fell off in March, really a rejection back underneath this original floor that AMC had. So there's a big M that comes down in the form of an S curve, which is fine, easy enough to track. But you can see that motion, it's ultimately just stair-stepping down these levels until it gets to this particular place, which is this midline, right? Which should have been a retest in some ways, but instead we're going down really low, probably to retest this major creek. And unfortunately, that means we now make a new low. Okay, so we're heading down to retest that guy. And I don't know what to tell you except that it's really low. I did the measurement on this large S curve, and it measured out to somewhere between 691 and 850. And that's a 50-50 right around this midpoint where you see this bottom here on the first part of the M and the top on the second part of the M. And that makes sense. That's the level that you broke down from. So 50-50 leads you right around to this particular bottom, which is about 50% of the next drop area. If it were to continue down, there's really no reason to not expect it to come down and test this marker. And it potentially goes as low as 350. And that's not ironic. I mean, I don't mean that in like a joking way either. I know I said 350 forever, back here, and I did not expect this 350. That wasn't my intention. But that's kind of where it would be if it continued to slide. At this point, I think it's more likely, based on the fact that we're oversold, based on the fact the S-curve is pretty much done. I mean, you could go a little lower, possibly one more drop. I said earlier maybe something like even in the 5s, but it's pretty much there. I don't see it being like a never-ending sell-off. There's already been a really major red candle right at the end, and it didn't move that far. And it was this last couple of days, it just dropped really hard, and it has this really high volume, and it didn't really go very far. And so that kind of a bottom signals to me that there's a probable stop there. And from that point on, you're just kind of waiting. You're waiting for that reaction. To keep it really simple today, if you can react and get back above 1080, I think you'll be in good shape to possibly have a really strong V reversal. But if at any point we come up and reject 1080, I don't feel super confident that we're not going to come right back down. And at this particular venture, maybe you just come right back down and retest the floor that was made, right in this area, right at low 7s, high 6s. But that's it. Like that would be something like what happened here at this major sell-off, where you have this reactive move to the upside, it comes back down again, and then it goes up. And I could see that happening in the area that we've got kind of marked off here, where there's just a massive amount of selling pressure into this bottom, and probably some buying as well. But here's the kicker, okay? And this is where I think a lot of people misunderstood what I was saying. I'm just going to leave it at this today, because I'm not going to look at the nitty-gritty. I did an analysis on stream today looking at this going into the bottom. It's narrowing, it's wedging, the volume's increasing. I think it's shrinking. I'm pretty sure it's about to erupt back to the upside to some degree. But again, it's like there's not an example that I could find reasonably where this setup does not result in some kind of a reaccumulation afterwards. So I know that there's a possibility that maybe the fact that this came down the way that it did means that, and maybe because we already spent time averaging out, here in the 25 area between $2 and $3, right? When you look at the average of APE and AMC together, it's right in this little low liquidity pocket. Maybe that means that we're just going to pass right through this area, and we're going to find support, up high again, and then push up to the next level again, which I think is going to be right around this 150. And I don't think we're necessarily going to go higher than that at this time. I'm just thinking like that's a possibility, and I just showed you like there's a possibility it could be like 160, and it looks like it's eyeing that next earning. Well, all of that's true. It could happen. You could get this really strong V-shaped recovery. But at the end of the day, a move from here up to 45 could be nothing other than just kind of an auto reaction to the selling climax, and you could be forming out a very large range. And as we've typically seen on AMC, when it does this motion, I'm not trying to be like a bear or anything or be like a naysayer, but this is the typical setup. Like, we do not normally see it break out and then just start going straight up. That's very uncommon. It almost never happens. In a slingshot model like the one we saw in that March move, it could happen. And that's pretty much the only place where I feel confident saying that, yeah, I think if that were to occur, you could have like a pretty significant move very, very quickly to the upside. Again, possibly even before that earnings date coming up. And it would be very simple. It would look like something like this, and then it would probably sell back off again, and this is where we start talking about whether this is accumulation or distribution or whatever, right? But this is something that, for me, I'm like, yeah, I could see it doing something like this if it were, and maybe coming even back to all-time highs, after a time. something like this, I could see it doing something like this, but it would take a while. I don't see it being like an overnight thing. And I think a lot of people are going to be upset by that. I'm saying all this so that you're aware when I start doing these update videos, I'm thinking with that in mind. This is kind of the basis for everything. And for the weekly update this week, I really just want to see if we can get back above that 1080. I wouldn't mind like a pretty huge push back to the upside. That to me would be really strong to push back up and close the week above $11 would be the best possible case. Anything else to me is just either a redistribution, which, we could have like one more LSPY here before a drop, or it's just we're bottoming, right? And we need to create a bottom before we move up. And that could look like a push up with some reaccumulation and then another push up. Possibly all that happening under 1080, but I'd like for it to be above that previous floor. So, my mouse is wigging out. So at this point, if you were to ask me if I'm bearish or bullish, I'd say I'm still very bullish on AMC, and I like the place that we're at. But I'm really only able to be strong bullish up to about 45. And I think after that point in time, there's a big question mark. And again, a lot of it has to do with the fact that we now made a new low, which to me, this looks like a giant double flush. Like we flushed high, and now we're flushing low. We made that 50% move above the top, and now we're making another 50% move roughly below the bottom. And so to me, it just looks like a big pump with a giant sell-off into distribution to go from highs to lows. And again, we've seen this before on AMC. It's not that unusual. It looks like this, and we've seen it dozens of times. And normally, the reactive move is not just rocketing back up. I'm not saying it can't be, but normally it isn't. Normally it takes time. So part of me wonders if this is where the misinformation came from today during the stream that people were misquoting, is like, seems possible to me, like that this takes a while, and this could take a long time. Like there's nothing to say that this has to recover, first of all, like this week. You could have a reaccumulation that lasts until November down here, and then you could have it push back out. We don't know that it's going to be that strong of a reaction that quickly. And it could be one of these things where we don't see the top here until January. And then you're wondering, well, how long does it take then? Well, I don't know. You look at what happened here in that big January move. It makes it look like it would be super fast, like instantaneous. But the problem is this: we don't really have any idea, aside from like the original combo chart, what the heck has been traded here. Like, this information has not been updated and will never be updated. There's no updated information to include APE's trading range versus AMC. So all we have right now is AMC's trading that occurred high up here, but that's not the actual average. If you were averaging between the two, APE and AMC, it would be somewhere right here in 24 area. It's like it's already kind of done this area, but we don't know exactly where. So it leaves this question of like, well, how much time do we have to spend there? I don't know. Could be super fast, could be slow. But look, even in this downtrend, this is what I'm trying to say, like, this could last till next July. Like, there's so much time that could be presented to you here. And even if it were a little more violent than that, there's still this concept of like, well, just because you push out, it doesn't mean you don't finish that M that we're talking about right here, right? And I think that's the key, is like we don't know exactly maybe what to expect all the time. It could be some pretty dramatic move, and this starts looking a lot like what? Well, this starts looking a lot like this, but a little wider. I'm just saying the timing of it, suspect. If by November we're up here, like that to me is probably the major move. I'd be watching to see if it redistributes past 160. But I'm not going to hold my breath past 45 at this point. It came too low, in my opinion. I can see it coming back up about equal parts reaction-wise to like that 30-something area, but I don't see it necessarily breaking at this time. And I'm really concerned about spending a lot of time in this lower range if it continues to bleed out or if it hooks and we come down. I don't see why you could, as a bear, make a case that it's going to stay down here, just like it did over here, and I'm not saying it will. I'm just saying you could make that case. I don't think it's going to be exactly like it was in 2020. So I don't think it's necessarily going to be this long-winded or whatever. But dilution and the news about dilution begs the question, well, maybe we will see that upward momentum happening soon. But then what happens next, right? So I think the reactive move back up to 45 makes a lot of sense to me, somewhere between 25 and 45. But after that point in time, it just really depends on whether or not we find support along this middle line. In my opinion, that's kind of the big kicker. So if we can get down to the bottom here, and we're pretty close right now, we're basically right on it. If we can get down to the bottom, I don't see why we can't then, bounce and come all the way back to the top. And that gives you that push all the way up to maybe that 160 area. So what am I looking for this week? One more time, really just want to see it close above 11 if possible. If nothing else, we'll just watch and I'll recap it on Friday. We'll talk about whether or not we saw any kind of good price action. I'm liking the volume being heavy and kind of being essentially like a big sell candle. I think that's usually indicative of a bottom, and it's a very heavy sell candle. I'm liking the RSI being divergent still, and that to me is really strong considering we're making a lower low. I like the whole pattern of that auto reaction taking us really fast back up to 45 potentially. That could be a really big play. Even if it only went up to 25, that's still a really big possible play. So I'm feeling good about the reaction here. I'm just not feeling good about the longer term stuff. Okay. And as far as like my feelings about the AMC community and about the work that I've done, I'm personally going to just say that I'm proud of the work that I've done. I don't have regrets about it. I look at this as a very positive experience. I learned a lot. I'm not abandoning anybody, okay? I may have been your favorite, but, for me, it's like, again, time commitment. And I understand why, that might frustrate some folks, but I don't get paid to do it, beyond what YouTube monetizes, and it's not very much. Maybe $100 to $200 a month at most if I get, if I have a crazy amount of videos. But that's a lot. That's not a lot considering how much time I spend. And I want to do other things in life. So I've got a lot of other stuff that I've got going on, and I've decided to make some different career moves and try new things. And stock market, it's going to be something I want to learn better. I want to do better at it. I don't want to just be stuck in a singular kind of line where I'm only doing one thing all the time. So for me, I think it's really important to just say, it's good enough. I can do this on a weekly basis, and that way I can add more value and content to the stream. So that's all I got for you. I hope you guys have a good one, and I will catch you at the end of the week.